Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. Well, Merry Christmas, Happy Holidays. Hopefully everyone's ending their day with a nice smile on their face. If you are an equity investor on multiple time frames, pretty much wherever in the world almost, you have to be going into the holiday, pretty happy, pretty cheerful, hopefully thankful. Thankful for where you're at as far as your financial health, and hopefully if you're not where your financial health is, where you want it to be, you're in the process and you're educating yourself in order to get to where you want to go. And if you've been watching the videos and you've been taking our educational courses and you're a member of the VTF, I'm sure you're making incremental steps, because I hear it every day from the community how everyone's putting together a process for them, whether it's macro investing over the long term, whether it's trying to navigate the intermediate trends, whether it's picking the right stocks, whether it's trading for cash flow, whether it's combining all of them. All in all, it's just a process where you follow trends, you follow price action, use a little common sense, and you try and have a glass half full. So with all that being said, doesn't mean you could have a glass half full and also short stocks. You could be a positive person and still, when the market environment is conducive for stocks to go down, there are ways to have risk down where you're not in the way, where you're not holding your nose and going on the water, and you can actually make money that way. So don't get me wrong, as me being this ultimate permeable, I'm just talking about longer term. It typically goes in that direction, and intermediate wise, we measure whether or not you have the skill set to be very active or take a step back approach. And if you quickly take a look at the chart of the SPX, you will see it's just been an unbelievable run. And there's been a lot of spots to navigate it. I don't want to get into all the action because I know everyone's probably cooking, getting their eggnog ready, having company coming over. But ultimately, we've had so many different crises this entire year, or so many things that the headlines were emphasizing about devastation, blah, blah, blah. You had a few trends to navigate. This was the first time you had that outside day. Remember right there, here it was, make it bigger for you. Recognize this, because this might happen next year. We might have a move, get an outside day, and slowly from that area, put in a wedge, break below it, retest it, get a small downtrend, do a fake breakout, and go all the way down to the moving averages. And who knows, maybe next time we don't hold the trend line and we continue lower. Woo, imagine that. Or who knows, maybe next year we put in a head and shoulders top in the top end of the range with the left shoulder, the head, the right shoulder, break the neckline, get pretty much risk down, even net short. I remember our community was pretty net short there, and come in, and same way we held here, maybe next year, we don't hold in, and we don't only pull back 4 to 5%, we pull back maybe even 10, 12%. Oh, isn't that scary? No, it's not. Or this last or third time, when we pushed through the prior highs and quickly negated it, doing a breakout failure right here, which was a spot to take risk down again. Okay, it went actually below the trend line, but gave you that red dog reversal to get back in, and then we broke that descending channel to go. So all in all, you take a look right here. Okay, these three patterns along a huge trend gave you 3 different spots to navigate for cash flow. 3 different spots. Risk off, maybe short, risk off, maybe short, risk off, maybe short. Hold trend line, risk back on, commitment to it, put more risk on for a nice move. Same thing here. Then you had this one, which was really good, which was almost like pretty much technical analysis 101, where it broke the trend line, got everyone out, then had a wide range bar engulfing this whole trend, get long there, commitment to it, take out the highs, don't come back below it, and then figure out where the move goes. So the question is, right now, you had even another small area to navigate, which was right here when we came into the Fed last Wednesday. What was going to happen? Were we going to close below the 50, get back to the trend line, all the crash guys saying we're going to crash? No. We reversed it, we engulfed it, we traded through resistance, we went back to the highs, digested it, and there we are. So with that being said, everyone's trying to make huge projections for next year, which is something that we're going to do also. Something using a little common sense, something using past experience with maybe weekly charts in order to put together some kind of outline with certain stocks that we're going to focus on. But really, you look at this year, the macro trend was in place, There was 3-4 times to take a little risk down, let the market figure it out, make some cute money short, see what the leadership stocks. The best thing about those time periods too, if you didn't want to make money short, you see what stocks held in the best, because those are the best stocks to go to the next time we rally, because they showed relative strength, they showed leadership, and that's probably where your hard-earned money was supposed to be put. So with that said, we're going to figure all this out as we end the year, as we start the next year, and as we go and start all over again. You all know as traders, sometimes you're only as good as your last month, sometimes you're only as good as your last day or your last year. As a trader, if that's what you are, start the year again. Whatever you did in 2013, write that down. Think about what you did well, what you didn't do well, work on that. Talk to your wife, your spouse, your whatever it is you share your financial household with, and go over a budget. And if you had an unbelievable year, do not set a budget for next year if you traded 2 or 3 times versus your normal year. Put some of that away. Live within what you want to do and where you think you're comfortable making. And if you happen to have an unbelievable year again, you know what? Then you're getting comfortable and maybe buy yourself a few nice things. But with that being said, the new year is going to start. If you had an opinion and you were stubborn and you stayed out of the rally and you shorted every uptick and you rolled them up, you know what? You better work on your process because you're missing out. A good case in point is, as I say, since everyone's talking about it in the media, is Twitter. You go to Twitter right now and you will see that it was a new issue. Nobody knew what would happen after it came public. Everyone had their opinions when it was trading in here. Oh my goodness, Twitter's going to be 25, 35. That's where all the analysts put their marks. But you know what? It could have happened, right? Yeah, it could have happened. This is when it broke below this recent range. Did it have follow through? Did it go to 35? Did it go to 30? No. It regrouped right there, came back up, held this upper end, and then right there, you had to get shorts off the brain when it broke above 42. I remember listing 42. Then it went up, digested sideways, went up again. Then it took out the IPO high. So if you were thinking short and you had short in the brain, this is a spot whenever an IPO breaks above the IPO high, that is at least where you cover. That's where a lot of people actually look to put on a long. Anyway, from there, you had a quick move up. It was very extended. We caught a little bit of a short here. Some people started early, didn't give you a signal. Hopefully you stuck around, or at least you got out with a plan. Here was your first red dog reversal. Here it had a little continuation. For me, it was only a day-and-a-half trade just from the cute side. And then this is when I went long again, when it held the 8-day, which is what a strong stock does. That's what it does. Look at that. Oh, it held the 8-day the whole time. Who cares about the valuation? Who cares about the PE? And then, it took out this. So you could either cover it here or covered a part of it, and then once it took back this prior high and you had as a swing short, that was your area to cover. But if you got short here and didn't cover here and didn't cover here and you started cost averaging your whole way up, you could have been, basically put out of business. Okay, or non-recoverable. And then even today, okay, just to bring it back to, real time. Today, I was short Twitter. I said it's a little extended. Let me see if I could catch a red dog reversal like I did that other time. I saw Facebook go from up to red and a little bit even further. I was short. I'm like, you know what, there are so many damn buyers in this thing. I'm done with it. Okay, I think I tweeted saying, you know what, thank goodness I'm not a bear, because I was shorting a stock for an hour and I feel like I lost my holiday spirit, which I have back. Woo! Anyway, but I did it with a plan. And you have to have a plan every which way you go. You go to the 5-minute version of this, okay? On Twitter, you will see that here is where it gapped up. Okay, gapped up, continued on this bar, okay? Before any of this, okay? Let's put this over here so you could see what I'm talking about. So on this bar, to me, this looked like it could be a short for the rest of the day, right? A big move. Last time I was a buyer of it around 58 through 60. Now it's at 67. Facebook goes red. Look at this engulfing bar, engulfing this entire area. That's when I added to it. I added to my short and said, you know what? Maybe I'll catch another cute short. Okay, it was strategic. And then this, to me, should have been an out. Okay, that would be your out, right? That stuff higher high. Who knows? It breaks a higher high. Maybe you can go to 70. Ooh, maybe. Anyway, this is what happened next. Right there, got me a little skeptical. That shouldn't have happened. Again, now it took back more than half of this wide range bar. So what does that tell me? That tells me that that wide range bar okay, does not have control anymore, okay, because the buyers were able to push it back. And then it kind of went inside, and then look, oh my goodness, it just negated all of that. So right there you had to say, you know what, maybe I'm wrong. Maybe this isn't a short. I'm not going to play the game. And then P.S., you know, it wound up going back and forth, back and forth. I think I covered right around here because to me it looked like it was holding in there. Facebook wanted to bounce, so I covered even before the highs, and thank goodness, because this is what wound up happening. You know, move all the way up to basically 70 bucks, if not, you know, right around there. So if you shorted here and said, you know what, I'm right, beat me, it beat you right here or it beat you right there, and then, you know, P.S., if you rolled it up, you know what, you lost a lot more money than you needed to lose. So with that being said, I'm just trying to show you how on multiple time frames you could have a process and a strategy so you know why you're doing something and why it might not be right and why you should get out of it. As far as other tactics, I feel like no one wants to hear me talk. Everyone wants to go cook, and I don't blame you. I got to get home to my family too. But quickly, you know, the banks still look decent. You know, you quickly go to take a look here. I'm just going to run through a few of them. Citigroup, which has been trading in this multi-level channel here, and I know a lot of people like this. You know, they say it's underappreciated. To me, it still doesn't act great and it's lagging, but you know what? It turned up today. It's got a nice inside level. I'm long a little bit. Maybe I'll add if it gets above this, but then the real price to get above would be this area of this channel. Bank of America also, I still think looks okay. This was a great stock for us for the majority of the year. Here's where it ignited, and then it flagged after this, and then continued. This somewhat looks similar, right? Here was your igniting bar. Now it's really digesting and holding higher. That was a big move. So to me, I'm still involved. If it starts to show relative strength and volume, 1587 I add, then hopefully it takes that out. If it starts to trade below this support, I'll probably take half off, and if it closes below it, you know what, I'll get down to really light and say, you know what, this pattern needs more time. As far as Apple, people are like, oh my goodness, what happened to Apple today? You know what happened to Apple today? To me, it would have been nice to continue, but look at the size of the move that it had yesterday. So some sideways digestion makes sense here. It does, because if it went right through, chances are it couldn't have been sustained, and chances are you wouldn't have the size you wanted to have if it went right through. So it quickly went above, had no staying power, you know, closed decent. You know, you could be long versus 562.76 or maybe even more depending on your risk. To make it easy for traders, I would think maybe another day, let the 8 and 21 day catch up, and then your next juicy buy would be on its way to get above 575, and then perhaps, you know, you could see yourself a move up towards 600 bucks. But ultimately, I think this little inside action was fine. You know, I'm not going to continue because, again, it's running late. All I know is that there's been a lot of great action in the solar stocks and in the 3D printing stocks. You know, Tesla's been a great vehicle. Today, you know, had a big potent move, came off the highs a little bit, big deal. You know, you have small stocks breaking out. You have a lot of things going on. You know, the key, again, is learning your process, having different time frames that you want to use, and if one of them happens to make you jump out of your skin, then that one's not for you. Figure out where your personality lets you live. Okay, if you could do all three, you'll make a healthy living. You'll be putting money away for your future. You'll be, you know, catching really nice stocks as a stock picker, and then you'll be able to time certain areas of the market that are conducive for A setups. So with that being said, hopefully over time you get all three, but until then, if you just want to day trade, you can look for the setups that if someone's adding to a swing position for cash flow, you're just making the cash flow. If you don't like to trade all day and you can't do that, you're just in your swing. And if you can't do that, you know, and you want to just throw some money into some kind of fund long term and, you know, you're 20, 30, 40-ish years old, do that too. But you're not going to do anything if you're stubborn, if you're a hater, and if you just, you know, want to not get involved because you've been burned in the past, and probably when you got burned in the past, you gave your money to somebody, you didn't look at it, or when you got burned in the past, you took recommendations from someone sitting next to you on a plane that wrote you a cute note on a napkin, or if you got burned in the past, it's because you didn't know, you know, what to do or how to do it. And now there's more than enough things out there to teach you what to do, how to do it, so you can take accountability for yourself. So with all that said, have a great holiday. I wish everyone the best, to whether you're in my community or not. You know, try and preach a glass half full, because, you know, happiness is the way to go. Enjoying life is something you should be doing, because, you know, life is short. It can be taken from you at any time, and hopefully you live it well and enjoy it. And with that said, Scott Redler, T3 Live. I will see you on Thursday. Merry Christmas. Ho, ho, ho.